Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Wednesday, July 18th, 2018. Markets are closed now, so I wanted to cover what happened today. Not a whole lot really new to report in the broad markets. I'll touch on that real quick and then maybe hit on a couple other things that stand out. We'll keep this one relatively short because, again, we don't have any big developments today in the broad markets. Yesterday's market update, I got that out late, but after the close, did a market wrap with just static charts, snapshots, screenshots of charts, and showed what happened with yesterday's big rally. Although, boy, it brought the bulls out in full force. We had a big intraday reversal, and admittedly, it was an impressive reversal from highs to lows. I think it was, gosh, about 2% almost, give or take, from highs to lows. But so we started the day out down big, rallied back up. But again, in the scheme of things, as far as the charts go, if you check your emotions, all it did is come in and backtest the wedge. And, we had a breakdown back here on the last 60-minute bearish rising wedge. The initial drop, we had a kickback rally to backtest. That one took us just inside the wedge, backtested that upper trend line, and then boom. So that's that, and again, trading, you can either trade with emotions or you can trade by the charts. I don't want to say I'm a purely mechanical trader. I will make adjustments to some things that I see, but yesterday this looked like an objective level to add back short exposure or add any more short exposure or initiate a new short. But I imagine a lot of people didn't want to step in and buy with that impulsive rally that we had in the markets yesterday. Either way, charts are the charts. I'm just reporting what I see. There it is. So as of so far today, well, today was a down day in the Nasdaq 100 and in the QQQ. So there it is, your breakdown back test. And now what I expect from here, what I'd like to see happen, I don't want to see another higher level back test. I don't want to see new highs. Anything is possible. We had that happen here where it looked like we got, breakdown was going to get going and we back tested again at a much higher level. But what I've noticed in the past and what tends to happen is, and one reason I like to use the futures charts, even if trading QQQ, and I'll never put futures as an official trade ID on the site. I know most traders, generally retail traders use ETFs. Some don't have access to futures accounts or the capital requirements or the experience, but I like to watch futures because they tell you a little bit different story. You can see round the clock trading. And then what tends to happen at market bottoms, we had a divergent low here. That was a near-term bottom, not a major market bottom, just swing trading. Again, when I talk, I wear many different hats. There's a long-term trend, and nobody's arguing that's bullish. And these are your swing trading trends: bullish, bearish, hopefully bearish. That's the way we're positioned, at least I am personally. And when a couple trade ideas on the site as far as the broad market goes. And where I'm going with that is what happens is the futures often have some of their bigger moves happen overnight. And I've noticed that pattern. It tends to trap the QQQ traders because the majority of traders out there trade the Qs and or individual stocks, Netflix, Apple, and sure you can trade those stocks pre-market and after-market, but that's only a few hours before and after the market opens and closes. Whereas futures trade around the clock. So what happens is those traders are trapped. So when the futures have a big move, and let's say we gap down tomorrow, boom, you've trapped a lot of shorts, or I'm sorry, a lot of longs that chase this rally, or want to be shorts that didn't have the gumption to short on that back test because the impulsive buying action yesterday. And so if we open down, now I want to show you the levels to watch. This one here is at 73.59, give or take. What that is, I'm looking at the previous reaction high right here. Um, and then once we took that out, there was a breakout to new highs. We back tested it once, failed that back test with impulsive selling, but now we're back above it. So either way, it's not a major resistance level, but it's a level I think is worth watching. And then down here, this next target or support levels at about 72.89, and you can see the reactions there. Of course, that reaction low the other day, a little reaction there, reaction. That's what I look for. And if those two levels go, and as each one goes, if and as I should say, if this one goes, that opens the door for a move down here. And if this one goes, I think at that point, the majority will have realized that this trend, at least this near-term uptrend, is over, and that's probably when we'll get that impulsive selling. But remember, I've been saying this. I did a video yesterday, was it? And I covered the earnings dates on all the top components of the Nasdaq 100. So I really anything's possible, but I don't expect fireworks. I think we're in probably for a pretty sloppy sideways range, even if we work our way down. And that's what I think happens. We work our way down, but I don't think we'll see any big fireworks until some of the big FANG stocks, FAAMG. That's my definition. That's the five stocks that I watch. They're much, much larger in market cap than Netflix. I mean, everyone still talks FANG, but Netflix again is a peanut compared to Apple and Google, Alphabet and Microsoft. So as far as market cap goes, and therefore the weighting that it has on the Nasdaq 100. So although a beloved stock, it's just not as important as those others. So all right, let's move on. Wrap this up. 60-minute chart of SPY coming up. I'm sorry, ES. Let's look at ES. There's ES, same story. Again, not a lot new to report. This was the last bearish rising wedge there. There's our breakdown. Never looked back. That correction terminated with a divergent low right here, kicked off this uptrend, and now we have a bearish rising wedge. We broke down there, and we came in and we're really back testing, if you will, this divergence line, which can also be a trend line because there's enough reactions at this point. 1, 2, 3, 4, 5, 6, 7. Either way, it just extends these negative divergences. So as long as they're intact, I'm still looking for more downside. And ideally, again, sooner than later. The level I'm watching on ES, the S&P 500 E-minis, 2796. Couple reactions there. Most importantly, this was our previous high. We had another failure at that level there, and then finally took it out there, and we tested it a few times. So I think that's a pretty important level. Hate to sound overly dramatic because again earnings are coming up and anything can happen, but we'll call that the nail in the coffin level. I think if that level goes with conviction, that'll clear the way for a move back down here to about 2744. So, and that is ES. Okay, and for you QQQ traders, this is QQQ 60-minute chart, and again, it's going to look very similar. This is that same wedge we were looking at a minute ago on the NQ E-mini futures. There's your breakdown, pretty impulsive, kickback rally, and we rolled over, but again, nothing much, not we really didn't have any fireworks today. Today was a flat day, a consolidation day, down about 0.19%. But at least we, after the back test, we are down. And what I was watching today on the 1-minute chart, this is a 1-minute chart. You can see 4 p.m. Here's our daybreak line right here, this yellow line. So this is where we closed yesterday. You can see the last couple days. We had more, well, I'll zoom out in a second, but this is what I watched today. We had an initial sell-off in the morning, came back up, and really this boxed area, these two lines, is where we traded through most of the day. Most of the trades occurred there, and I could also draw this uptrend line, and right into the close, we dumped down. I'll zoom in for you. You can see we ran up to the top of that range, about 180 and change, and then sold off into the close to close right there. Excuse me. So we'll see what the Qs do overnight. And again, you can see this is the last few days have been, much more volatility. There was that big drop down in the morning, followed by the big rip up the other day, and the markets are just taking a breather. At least QQQ is taking a breather today. SPY, the S&P 500 tracking ETF. Here's the 60-minute chart. So I have a little bit different draw here. I had the wedge breaking down on ES, and again, you can draw different trend lines. There's certainly one right there. There's that similar to what I had on the ES, and I think that's a valid trend line. But I've also added this one, and this is what I call my BOD trend line, benefit of the doubt. If I can draw two trend lines, especially since we broke that one, we're still moving higher. This one has not a lot of reactions recently, although there is one that helps to validate it. But you can see back here in the beginning, we had a lot of reactions on this trend line. So the benefit of the doubt trend line means if we're in an uptrend, you have to give the benefit of the doubt to the last of the two support levels, or the very lowest one to break. So therefore, I think if we can break down from this trend line now, it forms a nice clean wedge. And again, there's our reaction. More recently, maybe we get a couple more reactions there. Maybe we even extend the uppermost trend line. But if this wedge is going to break down, it needs to do so soon because this is a sweet spot. We're approaching the apex of the wedge. In fact, we're already well into the sweet spot of that wedge. So there it is on SPY. And, I've already covered the targets. These are all potential target levels. And right now, I'm just sort of eyeing if we get a pullback. And again, earnings are coming up, or a lot of big earnings, I should say. Let's just target this area for now. If anything bigger develops, at most, I think if we head down here, if something big happened in the next week or two, I probably look to start covering some shorts there, maybe even going long for a bounce right there at that point. But of course, dip buyers, you can buy any pullbacks to any of these levels if you're looking for levels to buy, objective levels to add on or buy the dips on the long side. Okay, another one worth updating is crude. In the trading room in the last few days, I might have put something on the front page, can't recall. Most of my activity happens in the trading room. CL, let me add another line here. Anyway, CL is starting to move. I pointed out been bearish. We've had this, rising wedge. It broke down, very impulsive selling. I still think that the intermediate to even longer term outlook on crude is bearish, but near term, like I said, we already had a heck of a, pretty sharp correction. We got quite oversold on the near term time frames, and we fell to support. And most importantly, as we fell to support, and that was the 69.80ish, I'm sorry, 66.80ish level, we did so with bullish divergence. So that's where it was the other day. We eked a little bit lower, but you can see most of the candles, these are 60-minute candles, closed right back up on that level. So that's really, we held support. There were a few intra-period breaks below, but again, that just set up as we started to consolidate on this level the other day. It set up even steeper divergences, and now we're starting to move up, and we just cleared the top of that zone. So this might put some um, pressure to the upside on crude in the overnight session. If you're trading this now, if you're trading CL crude futures and you're looking for targets, let me give you one right here. I can see, I think right about here looks pretty good. Why didn't that line stick? Let me try it again. Horizontal line, boom. 68, 69, and at most right now, my most optimistic bounce scenario, I'm not even sure we'd get there, would be about 70, 43. There's you can one way to do this if you're not sure just how much a trade might go, but you want to let your trade run, your position run, set a trailing stop. If you entered on or around that level, you can set a stop somewhat below, maybe below those recent lows right there. Put a horizontal line. There's a couple lows. That seems objective, and let this one run. And maybe ratchet your stops up along the way. And if and when it gets there, that's where I'd probably just take it out, because when crude reverses, it reverses fast, and likewise when it rallies, it can rally fast. So that's crude. I just wanted to mention that it continues to firm up there on the 60-minute chart, but being that the primary, or I believe that we're just coming off a top. I am not putting this as an official trade, because what happens, don't try to get too cute gaming counter trend bounces if crude just put in a major top. Maybe it didn't, maybe I'm wrong, but if it did, what you can expect is these rallies will get sold into just as they start to look good, and they can come around real quick. So that's why you have to use stops if you're, and plus this thing, it's futures. They trade overnight, whether you're doing futures or the ETFs. The ETFs are going to gap up or down. The ETNs, I should say, like USO and OILFF, I think it is, those oil tracking ETNs, because they're going to reflect what the futures contracts are doing. That's what they hold. And again, these trades can really get away from you. So, if you're new to the site, the big buzzword, probably the one of the best recommendation I can give any new trader and even an investor is to use OCO orders. One cancels the other. And that's once you have a position, you set a stop loss order below wherever your stop loss is. You set a stop loss order, and then you set a sell limit order at your price target, wherever that is, or price targets. You may want to scale out. And what will happen is when the first of either of those are hit, if your stops hit, it will cancel these orders. If your price target is hit, it'll cancel your stop loss order. And that's how you can sleep at night, trading futures, or if you're going to do stocks, just keep in mind they can gap down beyond your stop loss order, but they can also gap up above your sell limit order, and it will fill wherever it opens up. If it's a sell limit order, it's going to fill at the market once it opens. So enough on that. Also worth mentioning is Bitcoin. I think it was Big Bad Wolf in the trading room brought it up yesterday. Thank you for that, because I had a couple of I was watching Bitcoin, but I didn't have this one up on the screen at the time, and I usually do keep a chart up, and it's funny I didn't yesterday. But anyways, he had pointed out that a break over 7,000, that is a well-defined. This blue line here. Look at all those reactions on that 7,000 level, and that sparked the rally. And I did have Overstock and Riot on my radar, actually, as two of the long setups that I came across over the weekend that looked good. and Overstock had a big pop, so did Riot. Now, I had a couple levels. 7230 is also a level on Bitcoin, and these are Bitcoin futures, by the way. Symbols are up here, GXBT, and you can see some reactions here, here, here. Maybe that line could come in a little bit lower. I could actually tighten it up and bring it down a little bit. So call it 7,200. So maybe a back test there. And ultimately, as long as this holds above 7,000, that's pretty good because that was a pretty convincing breakout. Certainly impulsive yesterday. And then to look at the proxies for trading, if you don't trade futures or you don't trade cryptocurrencies, then Overstock, who most of you probably know, they used to be like an Amazon.com, and the owner just completely, I don't think he's completely, I'm not sure if they completely jettisoned that business yet. I don't think they have, but his plan was to maybe look into selling that. He wants to get into cryptocurrencies and um, what do they call it? Blockchain technology, all that good stuff. So this is a proxy now, and it has been for a while on trading cryptocurrencies and Bitcoin in particular. So there it is. You can see the levels right there. There was a resistance zone. His first resistance was at 39.30. Had a big move yesterday. It doesn't look like much on this chart, but that was, I think it was about 15% or so. Yep, about a 15% pop, and now it's pulled back. So it looks like an objective entry here as Bitcoin pulls back to support to maybe retest that breakout or come close. Overstock is doing the same. So around 39.30, looks like an objective long here. Market's closed right now, but as long as it holds that level, and again with a stop below, you don't just buy blindly. You buy objectively. You look at a pullback to support or a breakout above support. Those are the two most objective times to enter, and there's a little trend line that comes in right above there, so you can buy here maybe tomorrow if you get a little more downside with a stop somewhat below there. And next target is up here around 48.18, and that's Overstock. And if you want a little more juice, this is a smaller company, but it moves a lot faster. In fact, it was up about like, almost exactly 3 times that. It was up about 45% yesterday. This one I had marked over the weekend because it had a divergent low here setting up, and the stock was right there. Um, hindsight's 2020. I wish I would have covered it in the long trade idea video, but there's just so many. And this one really, again, because I had taken my eyes off Bitcoin at the time, that would have been a great trade idea. Intraday pop right up to my first target, 637. Overshot it by a little bit, but then closed right there. And this was a level that I had on the chart before. And next target, if I can clear that, I'm going to lower this one for you a little bit. And to be safe, you probably want to, if it gets up there, I like it here, about 783. So maybe it's flagging right now. Look at the 60-minute chart, possible bull flag. Let's see what happens. And don't underestimate just how much this one can run to the upside or downside. Speculative company, low price, only less than $6. But when it runs, it really runs, and that works. That cuts both ways, as you can see here. And just a quick tip to that too. How to trade a stock like this with the excessive risk but the above average gains. It's simple. Cut your position size down to a small fraction of what you might normally take. Whether you trade $1,000, $10,000, $100,000 or more per trade, per position, cut it down. Take a round number. $10,000 is what you'll trade QQQ or SPY. Put 1,000, 2,000 bucks in this, because if you hit it right, like yesterday, you're up 45%. So therefore, you make 45% on 1,000. It's comparable to what you'd make on 10,000 or more in SPY or QQQ in a good day or even a good week or month. And it cuts both ways. So if you lose, it's a stock drops 20% in a day, and you only had 1,000 bucks in it, you only lost, couple $100, which is maybe what you would have lost. That might be your stop allowance on a position, a SPY, worth $10,000. So that's the term I refer to as beta adjusted position sizing. Adjust the size on the expected beta, and you don't go. There's a lot of tools out there. ATR is one you can put up on a chart, average true range. But see what I do when I do those beta adjusted position sizes on the official trades. I don't look at where the stock has been trading. You're going to have a very low ATR when there's price compression like this or this, and therefore you might be fooled into thinking, oh, this stock doesn't have a lot of volatility. That's just a trading range. You have to look at the history, and when this sucker runs, it moves big. It does double-digit gains in a day, can do triple-digit gains in a week or a month. So therefore, you look at the history, and even more so when you don't be lulled into these trading ranges here, the low volatility, because it is almost always out of such periods of low volatility, price compression, this consolidation where the big runs happen. So again, those are things I take into account. And you can see here, once it finally broke below this trading range, boom, big strong sell-off, and cuts both ways. All right, that's that. Okay, we'll wrap this update up with gold. I did a video this morning, started that pre-market. Gold looks good. It's certainly in free fall, but if you're trading off the 60-minute charts, again, two ways to look at it. You can try to game an oversold counter trend bounce here, or there's a possibility, and again, you'd have to look at that video. I'm not going to spend that much time here because it was covered extensively. The potential is there for much more. We're only looking at a 60-minute chart of gold futures here. And so what you have most recently is this divergent low. You can see the divergence lines down below, positive divergence. There's a downtrend line to watch if you want to be safe. There's not a lot of reactions here. We only have two reactions so far. So we may come up, have one more reaction there. But if you want to take a speculative shot at it, you might be able to go long here with a stop below today's lows. Although it's hard to say whether this is going to work its way down within this wedge a little more or not. And just to wrap it with the daily chart, there's GLD daily time frame. You can see there's that potential divergence on the daily time frame, positive divergence. Little green candle today. Again, it was covered in today's video, so you can take a look at that. And if you want more bang for your buck, if you get the call on gold right, then you're almost assured in almost all points in time that the miners will move up more so. I always refer to the miners as almost like a leveraged play on gold because if gold goes up X percent, say 5%, 10%, the miners are going to go up 10 or 20 or more. And so there it is. You have divergence there as well in the miners right there, at least most recently, a little divergence right there, I should say. That's more accurate at this point on the daily time frame, and certainly the potential to pop up. There's a level that probably come into play about 22.28, and maybe and quite possibly to the top of this recent trading range around 23 or so. So that's GDX. We'll look at it on a 60-minute chart. Again, it was covered in the video today. There it is. I had this level right here. I think I covered this in the video. Here's a box. We recently broke down below this support, 2181, but we regained it today. That's bullish. There's your divergence on the 60-minute chart. We regained it. We took out the downtrend line right there. Pretty clear breakout of the downtrend line, so it looks good. And here's some targets there for GDX, and that's again trade as you want. If you want to leverage up gold, you can buy gold futures and certainly get a lot of bang for your buck there as well. All right, we'll wrap it up here. That's a few things to look at, and still work on getting some. I'd like to get a couple more official trade ideas out tomorrow. Be at my desk all day tomorrow, and then actually leaving town tomorrow night. So I'll be away from my desk on Friday, and actually a better part of Monday, but back on Monday, probably Monday afternoon. Anyways, I'll follow up with some updates and maybe some trade ideas tomorrow. This has been Randy Finney with the Right Side of the Chart. Have a great evening.